Hi, good afternoon, everyone. Thank you for joining our webinar. We will get started a little bit in about 2 minutes. I want to make sure I get everyone enough time to get logged in. We have a really great webinar, lots of fantastic information. So another 2 minutes just to give everybody a chance to get on. Thank you. Hello again, everyone. My name is Cooley. I am the Targeted Outreach Director for the Department of Financial Protection and Innovation. I want to say welcome to the Student Loan Workshop webinar that we're hosting. I'd also like to introduce the panel that will be going over a lot of the information today. Selena.
Good afternoon, everyone. Thank you for being here today. My name is Selena Damian, and I am the DFPI Student Loan Servicing Ombudsperson. Sam.
Hi, everyone. Thanks for being here. Samantha Sang, the Legislative Director and Policy Advisor at NextGen Policy, also known as NextGen California. Happy to be co-hosting this with DFPI, our elected officials from the Bay Area and our other partners as well. Thank you. Passing it on to Aisa.
Good afternoon, everyone. My name is Aisa Canchola Bañez. I am with the Student Borrower Protection Center. I am a Senior Advisor for Policy and Strategy and looking forward to going through our webinar today and answering your questions. And with that, I will kick it back to Q.
Thank you, Aisa. And yes, I do want to extend a special thank you to the offices of to Senator Scott Wiener, Assemblymember Philip Ting, and Assemblymember Matt Haney for helping us put together this webinar so that we can help share a lot of really great and important information about student loans and for student loan borrowers. With that, let's go ahead and get started. First, there's just some important information to go over really quickly. This webinar is being recorded. We will share the webinar recording with you. It'll be emailed to you after the event. Also, the slides that we're going over will be shared with you as well. Your microphones are muted and video turned off. Also, the chat has been turned off, but you, if you have a question, please feel free to submit it into the Zoom's Q&A feature. The panelists here will do their best to answer the questions during the webinar, but we also have a dedicated section at the end of the webinar to answer any questions that might still exist. Also, finally, all the information presented in this webinar is accurate as of this presentation. I know there's a lot of things that are changing and evolving as we continue to move forward, but yes, as of right now, this is the most up-to-date information about student loans. With that, I'd like to give a big welcome to Senator Scott Wiener, who has some remarks for you.
Great. Already? Okay. Hi, everyone. For those, I don't know who's on exactly, but I'm Scott Wiener. I have the honor of representing San Francisco and Northern San Mateo County in the state Senate. I'm happy to be joined here today by my colleague, Assemblymember Ting, who represents the West Side and Northern San Mateo County. We work very closely together on these and other issues. And I really want to thank the department and the advocates for pulling us together today and for the information they're going to be sharing with you over the next hour or so. We know that access to higher education is so essential for our economy, for building and strengthening the middle class and giving people a pathway to the middle class. It's just so important, and it's gotten harder and harder to access higher education. And we need to make it easier. And of course, one of the biggest barriers is cost. And we have financial assistance, federal and state, but it doesn't help everyone. Some people not at all. Some people at a lower level. And we know that so many students come out of college with debt. I came out of when I came out of law school, I had about $60,000 or $70,000 in debt. And that was quite some time ago. I'm not going to say exactly how long, but quite some time ago. And I imagine that if I did the same thing today as I did, okay, I'll say it was like 26 years ago, it would not be 60 or 70,000. It would probably be several $100,000. And I was able to eventually pay it off, but I know it was a struggle, and especially as these numbers get higher and higher. And we are communicating, basically conveying to students that, yes, we want you to have access to higher education, but we're going to place this economic drag on you for years or decades afterwards, which makes it harder for people to eventually buy a home or to start a family and so forth. So we need to do more to give relief to people with student debt. I want to really commend the President of the United States, Joe Biden, who took a great stride in canceling and creating a program to cancel at least some debt for students. It may not be as far as everyone would like, but it is further than the federal government has ever gone before. Of course, we just found out today that the Supreme Court, our right-wing Supreme Court, is going to be reviewing his power to do that, and I hopefully will prevail, but we'll see. But beyond what the president is doing, we need to expand our student debt relief programs and also make sure that everyone is aware of the programs that exist and the help that is out there. And that's what today is about. So again, thank you to everyone who pulled this together. And I wish everyone the best in terms of navigating this difficult area. And if you ever need help or have questions, feel free to contact my office. The phone number is 415-557-1300. And the email is senator.wiener, I before E in Wiener, at senate.ca.gov. And we'll put that information in the chat. So thank you so much, everyone.
Thank you, Senator Wiener, for some really great information and helping us put this webinar together. Again, I'd also like to give a moment for Assemblymember Philip Ting to have a moment to talk to the audience as well.
Thanks so much. Really appreciate all of you for hosting this very, very important seminar. Really appreciate Senator Wiener for being on as well. As a legislature, we've made really making higher education affordable a very high priority. We've worked to hold fees in place at UC and CSU and our community colleges over the last number of years. We've also done significant increases to funding, in particular in our Cal Grant program, as well as our middle class scholarship program. Over 400,000 students get Cal Grant every year. And the state's expected to provide $2.5 billion to Cal Grant alone. So I think I'm so glad to see, hopefully, so many students on here today to really understand Cal Grant, really understand the upside of it and how it could really help you get through college without being saddled through debt. We also appropriated $227 million one time in 23-24 to fund the middle class scholarship. And so middle class scholarship supports students at UC and CSU that are a little bit higher income level than people who qualify for Cal Grants. And so I think it's important to understand that even if you think you're at an income level that don't qualify for Cal Grants, there's the middle class scholarships. I know even at that income level, many families still struggle to put students through college. We know it's absolutely important. The senator mentioned it, that we want you to come out with as little debt as possible so that you can start your life really unencumbered. You have the ability to go buy a home really get your life off on the right foot. And I think it's absolutely critical. We know how important education is into really ensuring that people can attain a middle-class lifestyle. And it's absolutely so important for upward mobility. So we think it's really important here to support all of you as students and families in particular, to make sure that college is absolutely accessible and affordable. It doesn't help if you can get into college if you can't afford it. And so really we've been financing and putting money into these programs to make sure that college is becoming more affordable for Californians over the last couple of years. So really appreciate all of you for being here and really taking that first step to learn about the process, understanding it, understanding where we can help, and understanding also some of the things to watch out for. So thanks so much. Really appreciate all the attendance.
Okay, thank you. And again, a special thank you to Senator Scott Wiener, Assemblymember Ting, and Assemblymember Haney for helping us put this thing together. Really quick, let's go ahead and just dive right into it. There's a lot of great content. Here we have Sam, who's going to talk about the campaign for California borrowers' rights.
Yes, again, thank you to our elected officials for being here and for helping spread the word to your constituents and Californians across the state about this crucial information. And so we're proud to co-host this event and other webinars similar in California. We're the Campaign for California Borrowers' Rights, which is we're a leading statewide coalition of students, higher education advocates, and borrower protection organizations, along with borrowers themselves, trying to level the playing field so that folks can see a future free of debt one day. And so the following organizations, we all co-lead the coalition here with the Student Borrower Protection Center. So we have Aisa from that organization here today, Student Debt Crisis Center, Next Gen California, that's myself, Consumer Reports, and Young Invincibles. So I know we have a lot to cover, so I will pass it off to Selena.
Thank you, Sam. Good afternoon, everyone, again. So first, before we dive into the updates, I'm going to just talk about DFPI and who we are, and then a little bit on student loans. DFPI is California's Consumer Protection Agency. In 2020, California passed the California Consumer Financial Protection Law, which expanded our authority to oversee previously unregulated providers of financial services. This included debt collectors, debt relief companies, credit reporting agencies, consumer credit repair companies, and student loan servicers. We license and examine these companies to ensure compliance. We accept and investigate consumer complaints, take legal action when these companies are not in compliance, conduct education and outreach to enhance consumer awareness and to protect them from fraud and abuse. Next, please. So how much student loan debt do we have in California? There are 4 million Californians that owe $156 billion in federal and private student loan debt. Most of that is federal debt. 35 to 49-year-olds owe the most debt on average, and the average debt load of a California borrower is $37,000. Student loan debt disproportionately impacts people of color, with women, women carrying 2/3 of student loan debt. Prior to the COVID-19 pandemic, approximately 500,000 borrowers were behind on paying their student loans. And in the United States, student loan debt is now the second highest consumer debt category after mortgages, totaling nearly $2 trillion and growing every day. Next, please. Student borrowers do have protections on the federal level that are established by the Higher Education Act. However, those protections have not been enough to help students pay down their debt and to prevent the student loan crisis that we are in. Therefore, in 2020, alongside the CCFPL, California introduced Assembly Bill 376, the California Student Borrower Bill of Rights. This bill applies to student loan servicers doing business in California, including state licensed servicers, as well as banks doing servicing. And just real quick, the servicers are the borrower's main point of contact. The servicer is the company that the borrower is calling to obtain information about their loans, where they make their payments, where they call about information for information about repayment plans and forgiveness options. So it's different than the lender. This bill applies to borrowers with both federal and private loans, which is different than on the federal level. California is only one of 13 states that has established this advanced legislation to strengthen oversight of student loan servicers and to protect borrowers. So essentially what it does is it prohibits servicers from engaging in abusive, unfair, or deceptive practices. It requires that they work in the best interest of borrowers, and they provide accurate information to help borrowers stay out of delinquency and default. It establishes special protections for military borrowers, those working in public service, older borrowers, and borrowers with disabilities. It also established the ombudsperson position, my position, and I work with federal and state agencies to analyze and monitor the development and implementation of federal and state laws, anything that has to do with student loan borrowers. I also work with advocacy organizations and stakeholders to make recommendations and understand how we can better help Californians. And then conduct education such as this one and help borrowers on a daily basis, helping them understand their options and their rights. Next, please. Now I'm going to talk about the difference between federal and private loans, because it is going to be very important that you understand, first of all, what type of loan you have and the difference between both to determine what action you will have to take in order to benefit from these relief and forgiveness programs. First, you have your federal loans. The Department of Education is the lender for federal loans. After 2010, the only loans that are made are direct loans. These are loans with fixed interest, and they're subsidized or unsubsidized. Subsidized loans are ones where the government or the interest is paid while the borrower is in school. So interest does not start accruing until a borrower graduates or leaves school. Then you have your unsubsidized loans. Those are ones where the borrower pays the interest from the time of disbursement. So these loans end up costing more, and you ultimately end up paying more because the interest is from day one. Then you have your direct plus loans. You have your grad plus loans, which are available to students pursuing graduate degrees, or parent plus loans, which are available to parents of undergraduate students. These type of loans have fixed interest rates, are unsubsidized, and do carry origination fees. So also can be a little bit more expensive. Then you have your direct consolidation loans. A borrower with these can have a mix of loans and has the option of consolidating their loans. A borrower is able to combine all federal student loans into one single loan with one servicer and a fixed interest rate. No, there's no cost to borrowers, but it may increase the total balance of the loan. Then you have your FEL and your Perkins loans. FEL loans are subsidized loans that are made by a private lender, but are backed and insured by the Department of Education. They were discontinued in 2010. However, a lot of borrowers still carry these loans, so it's important to mention these. Then you have your Perkins loans. They're also subsidized loans that are available to undergrad students, and these are made by the schools. These were also discontinued in 2017, and again, a lot of borrowers do carry these type of loans. Next, please. Then you have your private loans. So private loans are made by lenders such as banks, credit unions, state agencies, or a school. These are not funded or subsidized by the federal government. They do not offer the flexible repayment terms and forgiveness options provided by federal student loans. They often require an established credit record and a cosigner. And it's very important to know that once you refinance into a private loan, you cannot revert back to a federal loan. So it's just very important that a borrower understands their options and just weigh out the pros and cons before making any financial decision regarding refinancing. Next, please. So these are some of the federal servicers that are currently in place or currently working. Mohila is actually the PSLF servicer, which I will discuss in a few minutes. And you have Nelnet, Navient, Great Lakes. You have your private servicers. Navient does both federal and private, and then servicers like SoFi, Sallie Mae, and banks like Wells Fargo and Discover are those private servicers. Next, please. And I will pass it over to Aisa.
Thank you so much, Selena. You know, so much to go through in such a little amount of time, but it's all good stuff to essentially share in the form of updates. You know, over the last few years, under the Biden administration and through acts of Congress, there have been some very important updates at the federal level, establishing new protections for federal student loan borrowers in response to the pandemic. As the result of Congress passing the CARES Act, federal student loan payments have been paused and interest has been set at 0% for eligible federal student loans. These include borrowers with direct loans and loans directly owned by the U.S. Department of Education. During this time, servicers have also been required to report to credit reporting agencies as if borrowers were continuing to make regularly scheduled payments, and any loan in delinquency has also not been reported over the course of this payment pause time. This is again in reflection as a result of the ongoing kind of economic impacts of the pandemic and its impacts on student loan borrowers. Additionally, the Biden administration announced a one-time account adjustment of income-driven repayment qualifying payments. So these are qualifying payments under the income-driven repayment plan, or IDR plans. These are folks who've been enrolled in an IDR program for any direct loan or federally held FFEL loan. This includes payments that have happened any months in which a borrower made payments, regardless of the type of income based repayment plan that they were signed up in, as a result of 12 or more months of consecutive forbearance or 36 or more months of cumulative forbearance. This is a response to years of research that showed that servicers were wrongfully steering borrowers into long periods of forbearance rather than helping them get into an income-driven repayment plan where they could get more affordable payments and help with their student loans. So as a result, the Biden administration did announce this one-time adjustment that gives folks the chance to get credit for prior months, credits for periods of long-term forbearance, including retroactively providing credits for months spent in deferment even prior to the year of 2013. Next slide, please. Or actually, this is just to provide some further context. This will actually make a huge impact for folks. This income-driven repayment payment adjustment, the Federal Student Aid Administration, the Department of Education estimates that these changes could result in immediate debt cancellation for at least 40,000 borrowers under the Public Service Loan Forgiveness Program alone, and several thousand borrowers with older loans who will also see forgiveness through income-driven repayment plans. And more than 3.6 million borrowers will also receive at least 3 years of additional credit towards IDR forgiveness under this specific policy alone. So these changes that we've seen over the last couple of years, and most recently the income-driven repayment payment adjustment, is part of a sweeping effort by the Department of Education to holistically reform the student loan system. And so it's been very exciting to see these changes coming down the pike, and we will share some more updates on the federal front shortly. And so with that, I will turn it over to Selena to give us an overview of the Public Service Loan Forgiveness waiver.
Thank you. So the Public Service Loan Forgiveness, or PSLF, you may have been hearing a lot about this program. This was a program that was created in 2007 to encourage individuals to enter and remain in public service where they may earn less than those in private service. Under PSLF, student loan forgiveness is granted after satisfying certain criteria for 10 years. The traditional requirements for PSLF are that you have to have the right type of loan, you have to have a direct loan, or those that are backed by the Department of Education, backed and owned by the Department of Education. So all those direct loans that I mentioned earlier. You have to be under the right type of repayment plan, ideally an income-driven repayment plan. the right type of employment. So you have to be working at least 30 hours a week for a qualified employer. This employer can be a government agency at any level. It can be state, city, county, municipal. It can be a water district. It can be a school district. It can be a military service is a qualifying employer, tribal work as well, and or a nonprofit employer, a 501c3 employer. So any of those are considered a qualifying employer. And then you have to have the right number of qualifying payments. You have to make 120 months of qualifying payments while working for the qualified employer. These payments do not have to be consecutive. So if someone decides to leave or take some time off, they can, if they are enrolled in PSLF, they can jump right back on and continue their count, their PSLF count. I'm sorry. Next, please. So what happened was in 2007, when the first batch of borrowers applied for PSLF, there was a 99% denial rate for not meeting program requirements. And part of the reason it's some of the reasons that I mentioned: servicers steering borrowers in the wrong direction, and just a lack of program oversight. Therefore, this waiver was created to help borrowers who were previously denied or who did not meet the requirements. So most of the PSLF qualifying payment rules have been suspended through October 31st of this year, so through the end of the month. Borrowers are encouraged to apply even if they were denied before or do not have the 120 qualifying payments. Approximately 130,000 borrowers have received cancellation, probably now even higher since its announcement, relative to the fewer than 20,000 before the waiver. Next, please. So now I'm going to talk about the changes with the waiver or the waiver requirements. So as far as the loan type, so traditionally to qualify for PSLF, a borrower has to have those direct loans that I mentioned, those that are owned by Department of Education. So those borrowers that don't have direct loans and have the qualifying employer can consolidate those older FEL, Perkins, or other federal loans into the direct loans. When they do that, they will receive credit for previous payments made on those loans. Parent Plus loans are excluded from this unless they are consolidated with the borrower's own loans. The employment requirement has not changed. You still need to have a qualifying government or nonprofit employer. The only difference is that before October 31st, if you apply, you do not need to be employed by that employer at the time of forgiveness. So this may benefit borrowers that have retired or since moved on if they didn't qualify for the program. And then the qualifying payment requirement. So any past periods of repayment, whether or not you made that payment on time for the full amount due or on a qualifying repayment plan, will count towards your PSLF count. Previously, servicers, if a borrower made payments ahead of time, if they were 1 cent under, 1 day late, they weren't processed on time, they were not counting those payments towards PSLF and they were not notifying borrowers. So therefore, payments will now count. Also, certain periods of forbearance and deferment may count. Again, that's that IDR adjustment that Aisa mentioned earlier. So these two programs go hand in hand. Additionally, COVID forbearance months count towards PSLF. That's since March of 2020, borrowers have not been making payments, but yet will still receive credit towards PSLF, getting closer to forgiveness or having their loans completely forgiven. Next, please. So how do you know, what do you need to do to find out if you benefit from the waiver or if you qualify for PSLF? One thing that's very important to know, and I get this question a lot, is people are rushing to get to October 31st, their application in. The program is not ending. The waiver period is what's ending. So for those borrowers that have older loans, have been working in public service for 15, 20 years and have been making payments and just didn't qualify before, those are the borrowers that this waiver benefits the most. the program will continue, and those that have newer loans, don't have that much time, 5-6 years, have not met the 120 count, can still apply. As long as they have those direct loans and the qualifying employer, the program will continue. They will still have a chance to sign up and start their count and their tracking. But what you need to know, first of all, is if your employer is a qualified public service employer. I did mention what the requirements were, but FSA, Federal Student Aid, does have a tool where a person can go in, enter the employer's federal employee ID number, FEIN, and they can see if the employer has already been qualified or is eligible for the program. So that means that someone from that agency or that organization already applied for PSLF. If the employer does not come up, it doesn't necessarily mean that they don't qualify. It could just mean that no one from that organization has gone through the process. But you will need the employee ID number. You can obtain that from your W-2 form. You can Google that, and even the IRS even has a database where you can check nonprofits by name, and you can find FEIN as well. But you will need that for the application. And then you need to find out what loans you have. Again, studentaid.gov is going to be your best friend for all these actions. You can create an account if you don't already have it. There you can download all your aid data, and you can see whether your loan is a direct, a FEL, a Perkins loans, and then you know what action to take. Again, if you have those older FEL Perkins loans that don't traditionally qualify, then this waiver will benefit you the most. One thing to note, and this was something that just came out a few weeks ago, an announcement is that if you do consolidate at this point your FEL and direct loans, if you have a mix of loans, you will not qualify for the Biden relief that Aisa will be talking about in a little bit. So that, unfortunately, is something that was beyond us. So, but we do want to let borrowers know that if you do consolidate, you may lose out on that. But again, every borrower's situation is going to be different. If your balance is high enough, you may want to just pursue PSLF, and you think you already are at the 120 or close. If you, if it's low enough and you want to just stick with the relief, it's going to all depend on your situation, but you will need to know what type of loans you have to know what actions to take. So the waiver deadline is October 31st. At this point, what borrowers need to do is they need to start the PSLF application on the FSA PSLF help tool. They will fill it out, enter some information, then they will download and print the application, and then it needs to go to the employer to sign. You do not need to have that in by the 31st, but you do need to have the use the tool so the Department of Education can have record that you applied prior to the 31st. Same thing with consolidation. The consolidation needs to be done on the studentaid.gov page, and then you do have to wait a few weeks for an answer on the consolidation. Right now, the only thing I can say, and I talk to borrowers all day, every day, is patience is going to be required. Just follow the steps as per the guidance, and then if there are any issues later on down the line, there will be a reconsideration process. But really know your loans, and then from there you decide what step you need to take. Again, you do not have to finish the process. At this point, you will not get an answer by October 31st. But just go ahead and use studentaid.gov. And then for those that don't have that much time, that have all direct loans, that have those newer loans, the program is not going to end. So don't scramble by the 31st to try to get this done. You will still be able to benefit and apply for the program. Next, please. And then I think here is the PSLF, the actual application. It's 2 pages. Again, FEIN number is going to be very important. These do require actual signatures or wet signatures from your employer. So they do need to be downloaded and printed, and then they get sent to the PSLF servicer that is MOHELA. If you have more than one qualifying employer, you will need to fill out more than one form, one for each employer. And I believe that is my portion on PSLF. So now Aisa will talk to you about the Biden student debt relief.
Thank you so much, Selena. And I just wanted to just echo my appreciation to all the work that you all do at DFPI, and recognize, our state representatives that have helped us co-host this webinar to really get all of this information out into community. I was getting a question on just slowing down a little bit, and so I will definitely try my best. Just as a quick recap, this is all really good on both the PSLF waiver form and process. It's giving a lot of public second chance credit that they've already should have earned, and built towards forgiveness under the public student loan forgiveness program. And then the President Biden's announcement on the income-driven repayment count adjustment will be another opportunity for folks regarding plan that you were in, regardless of whether you were in forbearance or deferment or forbearance, you will be able to have an opportunity to get credit for those months towards income-driven repayment forgiveness. So that's all good information. And as a quick reminder, this will be recorded and sent to folks. So if you do want to refer back to some of this information, you're welcome to do so. So as I mentioned, we also have some additional exciting news out of the federal government. So as back in August, the President Biden announced a historic announcement to provide broad-based debt relief of $10,000 and up to $20,000 to federal student loan borrowers, depending on their income. This was again in recognition of the harmful economic impacts of the student debt crisis and the ways in which they were exacerbated over the course of the pandemic. Within this program, eligible federal loan borrowers who have education held federal loans and meet various income requirements, which I will go over shortly, could be eligible to apply for debt relief. So let's go through this. So eligible borrowers must have earned under $125,000 as an individual, or $250,000 as a married couple or head of household in either tax year 2020 or tax year 2021. So those are the income specific requirements in order to be eligible for this separate broad-based debt cancellation program. Selena went through at length the public service loan forgiveness program, which is completely separate and apart. And these two programs are not mutually exclusive, but this is a separate and newly available option for folks to pursue relief under. For the majority of borrowers, an application process will be required or is required, and borrowers will have up until December 31st, 2023 in order to apply. For borrowers with who have already had shared income with the administration, with the Department of Education, through enrollment in an income-driven repayment plan, or recently applied through FAFSA, they may be eligible for automatic cancellation. And there will be an option for folks to opt out of this automatic cancellation should they not want the relief, and I can go through that in the next slide. So this was announced back in August. So a lot of the coverage was focused on the debt relief aspect of it, notably so. But the president also announced two other major policies that will impact borrowers. He also announced that there will be a final extension of the payment pause through January of 2022, so through the end of this year. So that means that borrowers should begin to prepare to start payments on their student loans as of January of next year. And the third part of this announcement was that the Biden administration was going to propose a new income-driven repayment plan that would drastically lower the amount of student loan payments that a borrower is required to pay on a monthly basis. So it was a pretty holistic announcement and very historic in nature. And so next I will go into some news on the application process itself. So the big news here is that the official application for President Biden's student debt relief plan is officially live. It was announced and shared publicly officially earlier this week. And in the matter of under 5 days now, more than 12 million borrowers have applied for consideration for relief under this program. So it is truly historic, and we strongly encourage folks to fill out their application today. Next slide. So as I mentioned, the student loan debt relief application is real, and relief is coming for millions of folks who have for too long really struggled under the weight of student debt. To access the application, you can go to the link provided here, studentaid.gov/debt-relief/application. The application deadline, once again, folks will have until December 31st of next year to apply. The application is incredibly simple and easy. It takes less than 5 minutes. I know I was helping some folks that I work very closely with on how to navigate debt relief, and it took them under 2 minutes. Currently, the application is available online. It can be accessible and accessed via mobile device. And currently it's available in both English and in Spanish. And then in the coming weeks, we expect a paper application to be made available for folks who may not have access to the internet or who may need to just access paper forms and mail their application in, but stay up, sign up for some more updates on the timing for the paper application. We do expect it to come in a matter of weeks. Next slide, please. So here is what you will need in order to submit your application. So as I had mentioned before, it is incredibly easy. It takes less than 5 minutes, and this is what you need to click send. Your first name, your middle initial, and your last name. You will need your social security number, your date of birth, contact information, so this is email address, and then self-attestation verifying that you meet the income verification requirements for eligibility of this program. That's what you need to click send and to have your application in the queue with the Department of Education. What to expect once you've clicked send. After applying, you're going to receive a confirmation email from the department. In that email, you will get some very, very handy information on what to expect. Over the next few weeks, the Department of Education will be going through various applications. They will verify your eligibility. They will determine, based on your outstanding loan balance, the level of relief in which you qualify for. So your loan balance will verify that you have eligible loans. Will also verify that you received a Pell Grant. And they will also may reach out if they need any additional information from you. So the application, when you submit it originally, you are attesting to the information being truthful and accurate and complete. But if there's any additional verification that's needed, the Department of Education will reach out to you directly. And then once the application is formally processed, you will be notified of the application being approved. And then the Department of Education will then communicate this information to the servicers, and the servicers will then apply your cancellation to your outstanding loans. Next slide, please. So let's go over, just as a reminder, the federal loans that are currently eligible for debt relief. So just taking a step back, the separate and apart one-time broad-based debt cancellation program applies to borrowers who meet the various income requirements. So $125,000 for an individual, $250,000 for a family or head of household. If you meet those income requirements and did not receive a Pell Grant, you are eligible for $10,000 in debt cancellation. If you did receive a Pell Grant and meet those income requirements, you are eligible for up to $20,000 in cancellation. I realize I missed that on my last slide, so I apologize. So those are the top line requirements. Eligible federal loans. This is a list of the eligible loans that qualify for forgiveness under this broad-based debt cancellation program. Your all federal direct loans, and your loans must have been dispersed on or before June 30th of this year. This includes subsidized loans, unsubsidized loans, parent and graduate plus loans, direct consolidation loans. Just want to put in a plug here. It's a huge deal that Parent Plus loans were also included. Selena had mentioned these are loans that parents take out on behalf of their children to help support the costs of a college degree. And it's very monumental that they will be eligible for relief under this program. Other loans held by the federal government. This includes loans under the Federal Family, Education Loan Program, FFEL, that are held by the Department of Education, as well as Perkins loans that are held by the Department of Education. And then the last bucket are all defaulted loans. This includes loans that are held by commercially serviced lenders. So these are private loans and private banks. If the loans are defaulted, they are eligible for cancellation under this program. And this includes defaulted, subsidized, unsubsidized loans, defaulted parent, graduate plus loans, and defaulted Perkins loans. As Selena had mentioned before, just to flag for awareness, as of September 29th, privately owned FFEL loans, these are loans held by private banks and entities, as well as privately held Perkins loans, not held by the Department of Education, are no longer eligible for relief under this broad-based debt cancellation program. So we just want to make sure to flag for folks, if they are considering consolidating these loans for consideration under the Public Service Loan Forgiveness Program, please continue to pursue that route and make sure that you are informed on the fact that it would then potentially make you ineligible for this broad-based cancellation program. I just want to make sure to specify these are two separate programs, and under the Public Service Loan Forgiveness Program, while consolidating might make you ineligible for this broad-based debt cancellation program, if it does make you eligible for the Public Service Loan Forgiveness Program, you have the option to have your full debt balance forgiven after 120 qualifying payments, rather than the 10 to 20,000 of cancellation within the broad-based program. So just want to underscore one thing that Selena had said: every borrower's situation and every borrower's loans are different. So we just want to make sure to stress all of these different options and make sure that you have the information you need to make the most informed decision. Next slide. And so with this, I just want to put one more note for awareness, is that with any new, program that is intended to help, unfortunately, scammers are not too far behind to try to take advantage of our most vulnerable folks and folks in community. So we did want to put out a note to just be wary of scams. I know that these are already starting to hit my cell phone. Folks claiming for a fee can, to offer help navigating President Biden's loan forgiveness program. I just want to stress, please, please, please hang up the phone and know that studentaid.gov will be your best friend. The Department of Education will never call you on your phone, will never ask you for your FSA ID, for your personal information. Those are folks who are trying to take your personal information. So please be mindful of the rise in scammers and protect yourself at all costs. Please. And then lastly, but certainly not least, there is help available if you do need help. So FSA has a robust complaint system, as does the Consumer Financial Protection Bureau, as does the California DFPI, to which Selena oversees as well, to help consumers who are navigating challenges or are struggling to get relief and help from their student loan servicers. Next slide, please. And with that, I will hit it over to you, Q. Sorry.
Okay, thank you, Aisa. So a lot of really great, fantastic information. We have a little bit of time, and I do want to spend some time answering some of the questions that we got. Samantha, can you, so Samantha is going to present some of the questions, and the panelists are going to try to answer some of these.
Thanks. Yeah, we're going to try to go through kind of the most common questions that we get, not only here, but just at our other webinars as well. So there was a question around public service loan forgiveness, or PSLF, when someone, is trying to go get that employment certification form, or ECF, signed, and they work at a for-profit, or sorry, at a nonprofit, a 501c3 entity. Like, who should they be going to get that form signed?
I can answer that quickly. You can go to anyone in HR, personnel, even management. There's no specific requirement as long as it's someone that can verify your employment. And yeah, just hopefully you're able to get in touch with someone.
Thanks, Selena. And then following up, one more question on PSLF that we get that's pretty common. You know, can folks make more than 12 payments in a year, or, you know, extra payments throughout the year to reach eligibility for PSLF kind of sooner?
No, you have to be paying your making monthly payments. So you can't make a bulk payment 4 months ahead because you still have to be qualifying that employer anyway.
Yeah, something else we like to say to borrowers too is that you do have to pay the 120 monthly, which pretty much evens out to like a 10-year total cumulative time frame for paying for PSLF. Another question, since this debt cancellation announcement came out, we have the PSLF waiver. There are a lot of questions around those FFEL or FEL loans. So how do folks really find out if they have the FEL loans that are qualified for that debt forgiveness?
What they want to do is they want to start at studentaid.gov. You want to start off and you want to download your aid data there, and then there you can see what type of loans you have. You'll see when you download all your data, you'll see direct loans, you'll see the word FEL loans, FFEL, and Perkins loans, and then that's how you'll determine what type of loans you have.
And then just to clarify too, a lot of times we get questions around, what is a private loan versus your federal loan? Again, like Selena said, if you log on to your studentaid.gov account, anything that kind of pops up there will clearly indicate to you if you have a federal loan or not. So another question, this is going to deal around, a lot of the servicers are exiting the student loan servicing industry. And so there's a lot of confusion about what happens to their loan after they get transferred to another servicer. So Jennifer is asking, her loan was serviced by Great Lakes, but it was moved to another servicer. And their new servicers, AES, for their federal loans, are those loans still eligible? So if you get a loan transfer from a new servicer, are those loans still eligible for kind of these debt forgiveness programs?
Yeah, as long as the loan remains a direct loan, it doesn't matter if it goes from one servicer to another. Well, actually, there are loan transfers that happen without borrowers even knowing or authorizing it. It's just the way that the system is. But the only way they would change from direct to private would be if a borrower actually refinanced the loan into a private loan. So just because it was transferred doesn't mean the status of it changed. But again, studentaid.gov is where you want to verify not just your the type of loan, but your servicer as well.
And
Perfect.
just to follow up on that piece, because I know there's been a lot going around about the, privately refinancing your loans. That is one of the downsides to privately refinancing your loans, refinancing your federal loans into a private loan. You lose a lot of the protections and eligibility for potential cancellation and forgiveness. This broad-based cancellation program. So just be mindful of that if that's something that you are considering. And a lot of the times private banks are not openly communicating those risks to borrowers. So just something to be mindful of as you see those refinancing incentives.
Right. Another temporary PSLF waiver question. Do the months of forbearance during the COVID period here count towards their monthly payments?
Yes, they do.
And we also get this question pretty often too. Does volunteer time work for PSLF forgiveness?
It has to be paid employment. So volunteer work, unfortunately, does not count.
Yeah, pretty much you have to get a paycheck from one of these qualifying entities. So but keep up the good work. And then maybe for Isa, there's a question about applying for student loan debt relief if they're currently in college. So for our college students out there, which loans would qualify for this current debt forgiveness program?
Yes, that is a great question. So currently enrolled students do qualify for this debt relief program. The only thing that they have to be mindful of is that your loans have to have been dispersed prior to June 30th of this year. If you have, so if you're a freshman and had your loan dispersed prior to June 30th, you are in the clear. Any loans that are going to be dispersed after this time, unfortunately, will not be eligible. So if you are an enrolled student, you meet the income requirements. If you are a dependent, your parents' income information will then be considered for the application. And then your loans have to be dispersed prior to June 30th.
And maybe time for one more question, I think. Let me know. But we get this question too pretty often. So it's around the full-time work for PSLF. So what qualifies as full-time work under the PSLF application? And then is there, any advice we can give to borrowers on making sure that their employer fills in the correct box when they have to check that off on their ECF or employment certification forms?
Yes, there is advice. Sorry, I was reading a question and I totally. What advice would you get? Make sure that the dates are just clear, that they write the months, the year clearly, the date, and then for PSLF qualifying employer, it's 30 hours a week or whatever the employer considers full-time. So just make sure they check one box or the other. I believe that answers the question. Aisa, do you have any additional, or Samantha?
Yes, and just to stress, for purposes of the PSLF program only for eligibility, the federal government allows 30 hours or the full-time, designation. So just if you are getting questions from your employer on whether or not, I see the question, I think this person is able to earn or works around 32 hours, just stress the eligibility requirements for PSLF requires at least 30 hours or the full-time designation. And this is to really reflect some of the adjunct professors or educators who work over the summer, or over certain they don't normally work the traditional 40-hour week requirements. So definitely make sure that your employer is aware of that and submit your ECF form before Halloween.
Okay, great. Thank you, Sam, for moderating the Q&A. Thank you, panelists, for the great presentations. A lot of fantastic information. I do have 2 more slides I want to go through. Again, we're right up against the hour. 2 big reminders. At the end of this month, October 31st, is when the public service loan forgiveness waiver deadline happens. So please make sure to complete your help tool by that point. Also, student loan repayment pause ends at the end of this year. That means student loan repayments restart in January. So make sure you are ready. And then finally, we have another slide where we've gathered a bunch of student loan resources. DFPI has dedicated a web page for a lot of different student loan borrower resources, things like a list of nonprofits, government agencies, and legal aid groups that provide assistance to students. Also, we have a YouTube channel where we record and keep all of our webinars. Be sure to check that out. And then finally, be sure to subscribe to the DFPI. We have a newsletter that we send out monthly. We send updates about upcoming webinars, events, and also consumer alerts if you're interested in that. And then finally, I do want to share Selena Damien, which is our the DFPI student loan OBUDS person. This is her contact information if you do have additional questions about student loans. And finally, I want to say thank you, a big special thank you to Senator Scott Wiener, Assemblymember Philip Ting, and Assemblymember Matt Haney for helping us put this together. Thank you for the panel. Thank you to the panel for doing a fantastic job. Thank you everyone for attending, and please take care of each other out there.
Thank you, everyone.